Always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Happy Friday. Welcome to the Market Forecast. Friday, January the 14th. I'm John Hoagland. As always, thanks for trusting me with your time. We're looking for context, always thinking risk management first and focusing on our patients. Economic numbers this morning, 7:30, the retail sales numbers came out, and they were not looking too good. Worst numbers we've seen in 10 years. Across the board, all of them lower. Core retail sales down 2.3%. They were looking for a 2.2% increase. All of them were looking for an increase. All of them came out negative. Retail sales month over month down 1.9%. That's the only one they were expecting to be lower at 0.1%. So we've got some digestion to go on in these markets. We still have industrial production due out at 8:15, business inventories and consumer sentiment at 9 o'clock. So we're still waiting for some of those numbers. But looking at the equities after the move yesterday, and it's looking like we're going to be perhaps continuing that move to the downside. Both the S&Ps and the Nasdaq had late spikes. At the end of the day yesterday, we're opening below those late spikes. You know, the probabilities are that's showing acceptance of lower pricing. We may see these markets heading in that direction. We're going to check that on the charts shortly. U.S. equities they're kind of steady to lower earlier. They're a little bit lower now, of course. Yesterday, apparently, some rate fears and inflation fears, of course, started coming into the market, and we had a pretty decent downside move. It was early. It was a kind of a grind early in the session, but if you were looking at that 30-minute chart, started one time framing right off the open, and boy, it sure pushed to the downside, currently testing weekly kickoff low. Earnings season. We've got earnings season opening up pretty much today with a little bit of a banking deluge. Four banks, including J.P. Morgan, Citibank, Wells Fargo, and BlackRock all came out with their earnings today. They were all decent. The only one that missed was on revenue for J.P. Morgan. They missed on revenue just a little bit. Apparently, the U.S.-Russian talks last night broke down. If you see the European energy prices, nat gas futures were up almost 13% at one point last night. So some bad news there, of course. And then crude prices we're trying to work their way higher here this morning. Supply questions remain if we can get this virus under control, or if we just decide it's going to be something we're going to have to live with. One or the other. So a little concern for the supply side of crude oil. As always, make sure you like, share, comment, question, feedback, and heckle at will. Hit that lucky like button. Subscribe to our YouTube channel so you can get a notification when we do go live. I saw a question in here talking about the foundation, and it is up. I'm going to put this... Well, I'll do that when we do the charts. I'll show you where to find it on our YouTube page. Lacey, it seems that, I live next door to a school, and there's people that walk their kids to school with their dogs, and Lacey likes to yell at their dogs as they go by. So I apologize about that, but hey, the dog's a dog. They're going to do what they do, right? Thinking about the VIX up up 5% this morning at 21.28. Little spike in the VIX as the equities look like they're going to perhaps take another look to the downside. The dollar index up slightly, 94.84, and the 10-year yield just a little bit lower than yesterday at this time. Yesterday it was 1.73%, I'm thinking. Now it's at 1.72%. Hopefully, if you're in the markets, they're going your way already. It's pretty early in the session here. I'm going to say good morning to everybody. My brother Rick, first one in the room. Rick, you win the prize. Sean, good morning, fellow Coyote fighters. Yeah, we haven't seen any coyotes since that session, but thinking about getting a Berna. It's like a gun, but it's not a gun. It's an air gun, but it sends pellets full of like bear spray, like a little pellet, and if it hits something, it pops, and it gets all over you. And maybe I can scare off some coyotes with that. Good morning, Vince, Kevin, Brian, Mark. I'll show you where the foundation's videos are. I checked. The video 4 is up. Jim, Chris, good morning. Happy Friday. Yes, let's finish strong and finish early. Yes, just like voting. Early and often. David, Robert, L. Stewart, Sean, I'll show you as soon as we start looking at the charts here. Expediter, George, good to see everybody. Manuel Caesar, Charles March. Sarah Hall, good morning. Ryan, dead letter opener. Alessandro, good morning. Dead letter opener. I hope everyone is feeling fit, and fighting fit. Yeah, I'm feeling better. I mean, I still got a little bit of the cold, but I'm doing a lot better than I was. Andre Nemos asking, one has to wonder how long the market wants to be going into the long weekend with the Ukrainian situation. Yeah, it's a little bit scary and dicey over there. Thanks for yesterday's lesson, Hogue. It kept me glued to the screen. Well, for Federico, that's good. I was just hoping for just enough to keep you from leaving. Sean, no problem. Dead letter opener. Lacey agrees. Yep, Nico, I don't know what to do today without the foundation course today. Well, it's all right. We'll be back at it next week. Next week, we're going to be talking about some of the trading choices on Monday. Trades beneficial to traders on Tuesday, detrimental to traders on Wednesday, and a deep look into trading psychology on Thursday of next week. So got a lot of good stuff coming, and just be patient. We will be there. Want to know what the dog thinks about the market. As she comes back over here, we'll ask her. Internal window shutters. Yeah, that's what that's what we should have gotten, but no, we did not get those. Dead letter, school's back when we have kids home for another week here in Australia. You're in Australia because of Pokemon. Oh, my goodness. John, Three Lions, Insight, Rob T. Wen, Equanimous, Island Slim Trading, good morning. Eagle Flying, James, good morning. That's what we say in Australia, fighting fit. That's cool. Maybe throw a couple of shrimp on the barbie, too. That's a little cliche now, isn't it, I guess? No, it's good to have you with us, mate. If U.S. indices go down today, you think bonds will continue to the upside. It's kind of hard to see bonds going too much higher with the talk of rate hikes coming down the pipe, but anything is possible. All right. Lacey should love the market. It pays for her kibble. Yeah, you hear that, Lacey? Is Paul Hogan still? I think he is. I think Paul Hogan's still alive. I don't know. I don't have time to Google that, but I bet you he is. He's just out on walkabout. All right. We got about 4 minutes here. Let's jump in and take a look at the S&Ps. And then we'll watch the crude oil open, see if there's anything we want to be thinking about there. Okay. Deanna, thank you. I was looking for that yesterday. Friends of the Coyote is the Facebook page. Oh, no, I wouldn't. I don't want to kill him. I just don't want him killing my dog. Yeah, he's still got a big knife. Wuhan. Unfortunately, yes, I guess Paul Hogan fans are thin around here, I guess. I like him. I thought it was hilarious. I love those movies. All right. Audio, okay. Thank you. All right. We talked yesterday, when we were trading in the middle of the range here yesterday, I was thinking, there was a lot of uncertainty. It seemed like the market was searching for something. The day before, we had a very even bell curve, and that's usually a warning sign that the market is going to likely find some sort of direction. But it seemed, uncertain yesterday. But apparently the uncertainty usurps resilience this week. So we've got a downside move here. Overall, and structure-wise, we're still looking at a positive structure. The Tuesday and Wednesday rally here, this little bear flag basically is what we put up here, failed to bring in new buyers. It was lower open interest on those days and lower volume as usual on up days. Yesterday, we found some new sellers in this market. We added 19,000 in open interest. It kind of tells us that, okay, we've got a little bit of a decision that we made yesterday. We're looking at sellers coming into this market. So we may be at risk of changing market state. And I think we are at a bigger risk of changing market state in the Nasdaq. We'll see that here shortly. We got weekly kickoff in play today. We're already down below it. We're going to be opening with a gap. And look at the profile. This is yesterday's close. We have a late spike. When we open in or below the late spike, it's accepting lower pricing. So we're going to be looking for opportunities to sell strength. Okay. The black and white, the lines here, the black lines, these are weekly kickoff levels. These are levels that I send everybody on Sunday night in an email. Hopefully, Equanimous, you're getting those emails. These are levels that I'm looking for longer time frame traders to adjust inventory. You can see Tuesday it put in the low. Now we're opening down below it. What was support may become resistance. So if price does get back up to that level, that's going to be an interesting area for us to look for opportunities. The purple lines are last week's range. Try and keep things very simple because, folks, watching this on their phones or whatever. So it's again, important inflection levels, weekly kickoff levels, I call them, where I look for longer time frame traders to adjust inventory at or near those levels, providing possibly some bigger opportunities. Back to the 30 now. Here's that weekly kickoff level on the 30. You can see here on Tuesday, it put in the low. Monday, we looked below it, but rejected. We went back to it. On Tuesday, it was the low. We had 2 days of upward motion, low volume, dropping open interest, even bell curve, opening with that even bell curve. So when that bell curve gets even, sometimes it uses up the ability to facilitate trade, and the market has to go looking for different levels to find volume. Well, it certainly found volume and an increase in open interest yesterday. What does that mean for us today? Well, settlement 46.52 even. We've got the market kind of accumulating some shorts before the open here, but we are opening with a gap below yesterday's regular trading hour session range. We are opening below a level that was previously supportive may become resistant, and there is plenty of space down below and some unfinished business down below as well. We've got a naked point of control here. We've got a gap left here. We've got another naked point of control down here. These are off the chart, but I leave them on so that we can recognize them when price does go back to those levels. So we've got some visual levels down below the market. If we can't hold below weekly kickoff low, and there's a bit of a caveat to that. The weekly kickoff sometimes becomes magnetic. If we use it as a short below, long above, short below, long above, sometimes we can get cut up a little bit. So be cautious around there. This one has been checked. This naked point of control. I'm just going to bring this over here to where it did end up getting checked. That is no longer a factor, but we do have a naked point of control up here. So again, opening with a gap rules. If we can't close the gap relatively early, I understand that's a subjective term. And if we can't close the gap relatively early, that has us looking again to trade in the direction of the gap, which would have us looking lower. It's going to be an interesting trading day today. It is Friday. There's plenty of risks out there in the world. So be cautious. Let's take a look here at the crude oil open. We kind of went past that. Here's the daily upside structure. Yeah, of course. Higher highs, higher lows. Open interest increased on the pullback, may have found some new shorts, and to me that's a good idea. That's good for upside. We added 27,000 contracts yesterday in this market. Now open interest is up over 134,000 contracts this year. It's up over 2 million. So since the beginning of the year, in an upside move, we've been adding to open interest. Don't forget, however, we are in rollover. It's scheduled for Monday. We'll watch the volume on Monday and Tuesday to see when it really happens. So we may just fall into a range right around this weekly kickoff level because the major players are more interested in getting a cheap rollover than worrying about directional activity. They will get pushed into directional activity, but so far everything looks very comfy and cozy right here at weekly kickoff high. This is one of those situations where it may become magnetic instead of repulsive. So let's go look at the 30. I don't know if we see anything that's going to be that important for us to watch the opening range here, because we're opening in range and in value. We're looking kind of longish before the open, but we've already reconciled any overnight inventory. We're here in the middle. We're in range. Not really looking at anything too important here because we are in range and in value. When you take a look at the daily chart, you got to think, okay, what direction is this market attempting to go? And how good of a job is it doing getting there? Now, we're getting a little bit of a stutter step here, but again, it is rollover. We have to remember that. We've got two daily closes back above that 82 level. We find a little bit of support of it in it just before the open here. Now we're in range and in value. What's the opening range look like? Big. 17 tick opening range. That's a little big, especially when the market opens in range and in value. When the market opens in range and in value, there's very little change to the perception of the value of a barrel of crude oil. So I'm going to let the market establish an early range, and I'll focus my activities on the extremes of those ranges, if you will. All right, let's take a look now at the Nasdaq. Okay, the Nasdaq. S&P has still been putting in higher highs and higher lows in the longer time frame. Look at the Nasdaq. We got lower high. We have lower lows. Are we headed for another lower low? It's very kind of a similar situation. We've added 8,700 on this move to the downside. 2 weekly kickoff low. Weekly kickoff low now resistant with the market moving lower. We have a late spike. Come on. We have a late spike yesterday. Here's the late spike. Here's current last price. We're probably going to open with a gap and below the late spike. So late spike special situation says if we can't get back to that value, or if we get, if we take out the high of the late spike, that may be a bit of a change in market state. But the probability is, because we're opening below that late spike, that we're accepting lower pricing. If we continue to try and push into that lower pricing, some pretty good opportunity there. Okay. What did retail sales do? Well, they didn't like it too much. So, watch the opening range in the S&Ps and the Nasdaq may be something worth watching, because again, we're opening out of balance, out of range, and out of value from yesterday. Gold. It's continuing to struggle near this upper extreme here. Okay, we've been in this area for seemingly forever. Let's go back to June of last year. We've had our excursions out of it, but I'd say call this about the midline here. We're working on trying to find some sort of new direction, but it seems to be having a little bit of a stumbling block at the upper extreme of the range here. Now, when we're in range trade, the plan is you get to the upper extreme, you short. You get to the lower extreme, you go long until there's a breakout. And if there is a good breakout, you got to go with it. So right now, I'm looking at this as relatively range bound. I got to be thinking, what is the market attempting to do? I think it's attempting to go higher. We lost 12,000 in open interest on this pull back yesterday, but now we're in a 3-day range, and that gives us opportunity. If we get near the low of the range, we can limit our risk by looking for longs there. If it doesn't hold, we're out. We don't have to risk a lot. If we get near the high here, we're going to fade that. And if it doesn't work, we're going to lose a little bit, but we don't have to lose a lot. Kind of strange, because on either side or inside of that is the weekly kickoff level, which usually is more repulsive than it has been recently. This is the 30-minute chart here. Okay, overnight, we were kind of mixed. We're getting a little bit long now. The fact that the market is kind of pushing and perhaps holding above weekly kickoff low. We've got a little bit of one-time framing activity early in the session. And we're outside of value. So as long as we remain above value, I might be looking for this market to continue a move to the upside. But again, we're looking at the upper extreme of the 2-day range that we've been in. Be careful. You're always thinking risk first. If you're gonna look for a short, where is the market telling me I'm wrong? Am I close enough to keep that opportunity cheap? If I can keep the opportunity cheap, it expands the potential profit target. And if I get into a good trade, I'm going to be looking for that trade to be asymmetric, where I'm risking 10, 15 ticks. I want to make 30 to 45 ticks, if not more. I don't think the market state is ready for that here just yet, but these things do change in the middle of the day. All right, let's take a look at the euro now. Looks like a little steam was let out yesterday. We were, looking at this. This is the balance into breakout type situation. And when you're stuck in a range, you fade the range until it breaks out and it accepts. We broke out and accepted. Excuse me. Still fighting that cold a little bit. We broke out Wednesday. We had some pretty decent momentum. We tried to continue that momentum yesterday. We did not bring in open interest. We lost a little bit of volume. What direction is this market attempting to go, and how good of a job is it doing getting there? It's attempting to move higher. It's not doing that good a job. Losing open interest, losing volume after a breakout day, not usually a good sign. Let's take a look at the 30-minute and see if there's any opportunities we can find here. Okay. Overnight high and low were somewhat interesting. We've got the 7:30 session basically trading to value high from a couple of days ago. Do we have any overnight inventory? If we do, I'd have to say it's a little bit to the short side. Did we put in a gap? If we did, we probably closed it in the 7:30 bar here, which we did. I'm going to be watching to see if this area, the current low, if we're getting a little bit too short time frame and nothing happens here, there may give us an opportunity to bring price back to settlement. But is it far enough? Is there enough opportunity for us to take that trade? It's really got to be cheap if I'm going to take it just right back to settlement. It may happen before we're even done with the forecast here. Let's go take a look at the 10-year. Here's the daily. Earlier this week, we said, well, maybe we needed to start looking to buy weakness. And looking at this chart, if you timed it right and found the right spots, you've done all right. The upside ambition seems to be cutting off just a little bit. We're seeing volume dropping. We lost 5,800 in open interest yesterday, which may indicate some short covering, which does take buying power away from the market. We've got an inside extended trading hour range going here, so I'm going to try and stay patient. If we see something here on the 30-minute chart, we see the high of yesterday's range, and we see the low of yesterday's range. We've already tested down to that. We've tested it earlier. If we're not going to be doing much, we're going to be waiting for new information. This, the overnight high and the overnight low might be actually interesting levels for us to take a look at. Now, this overnight high is just put in the regular trading hours session, but it's close enough to the range high yesterday. The extended, the after the close highs up here, just a couple of different kind of levels here. I think it's kind of interesting for us to see. There was a gap that we had left in the past, and this market just went right to it. We also have a late spike here. We have a late spike. We open inside the late spike. We may have. The longer we stay in this late spike up here, the more likely we are going to find acceptance of higher pricing. If we can't take it out, if we can't take out this high, the overnight high, the daily high, or yesterday's extended trading hour range high, maybe that we're not going to see that movement. But last night we got pretty short. I think that's reconciled. Maybe some opportunity in this late spike here. Whoops. Nat gas. We almost forgot about the nat gas. Here it is. So, wow. Wednesday, boy, we sure had that breakout move to the upside. Took us through two major levels. That $4.80 level, which, I put that in on Sunday night because we were kind of looking like we were going to break out above weekly kickoff. This is weekly kickoff high here. We opened and we were, looking above it on Monday. So, I set up two more kind of levels for us to kind of look at. And we got to this upper level. We closed it. And just the opposite move on the next day. We lost 10,000 in open interest on this move on some pretty high volume. So the momentum to the upside was pretty much 1 or 2 days, and now we're right back to where we started. This weekly kickoff level here may end up being supportive. Okay, that level is $4.07. Okay, we're a couple of cents away from it at our current low for the session. Let's take a look at the 30 and see if we find any interesting things to look at here. So we've got a gap. We've got a naked point of control. This is going to be checked in regular trading hours as of right now. A little bit short, back to settlement. We've probably reconciled our overnight shorts. You get a chance to see the market down here at weekly kickoff high, which resistance could become support. There might be an opportunity for us. And since we did open outside of yesterday's range, we have the possibility of what we call the value area special situation play. Dalton is the one who came up with this, and he doesn't really look at it that much anymore, but I do find that it's still valid from time to time. The market has opened outside of yesterday's range, outside of yesterday's area of value. We open outside. If we reaccept inside of value from the previous session, then there's a probability, a relatively decent probability, that upon acceptance of value from yesterday, that at some point during the session today, price could go and recheck the other extreme of value. Remind me on Monday. We'll see if this plays out, if we do get the opportunity to find acceptance back inside value. Now, what the hell is acceptance? It's a very subjective term. Sometimes you're going to have a couple of opportunities to look for a long, and it's going to go against you. The way I learned it is you need 2 30-minute bars to close back inside value to mark acceptance. Remember, we look at acceptance of price over time. So if we spend some time back in value, that's going to increase the probability of a move back to the other extreme of value. Again, remind me Monday. We'll see if that actually plays out. So here is our YouTube page. I'll put this in the chat there. So if you're looking for the foundation session from yesterday, you got to go to playlist, Trading Foundation Week 1. Just click on it. Now you've got 104 there from yesterday. There's me. They're nice. No. Oh, geez. Okay. So there's 1, 2, 3, 4. Next week's will be up the same way. So again, go to playlists, and there it is. Right. So I think we're in pretty good shape. See a couple of questions here. Vince, gap rules in play for the S&Ps or patience? We are going to be opening in just about 10 minutes here, and it's pretty high probability of us opening with a gap. So when we're out of balance, and we are also so close to that weekly kickoff level, found support added on Tuesday. We're below it now. We've opened with a gap. That could offer opportunity. If you're thinking, Vince, about the opening range trade, I'm thinking about it too. Island Sim Racing. Yes, we are going to be going over the basics of the market profile in week 4. I think it's on the second day of week 4, intro to the market profile. So, it's something you can study up on a little bit before that. If you start reading Mind Over Markets by James Dalton. Gap means opening outside the previous day's regular session range. You're welcome, Francis. Sarah, you're welcome. Hey, Fred, good to see you. And I think we're talking about coyotes now. Yeah, we had 3 coyotes triangulate our dog one morning. I remember this, Rick. Your friend raises buffalo. A pack of coyotes took one down. 1,400 pounds. Oh, my goodness. Pupping season, so mothers will be territorial. Yeah, I'm going to definitely check that out. Friends of the Coyote, the Facebook page. I'll check that out. And thank you again, Deanna. Thank you, Nemo. Thank you all that had comments and ideas on dealing with the Coyotes. We're going to deal with them by staying the hell away from them if we can. Is that Island Sim Racing? Good eye. It is a hood scoop. Can you name the car? Yes, Monday is an abbreviated trading day. There probably won't be a lot of activity. You're going to have a lot of banks and federal offices are going to be closed. You're going to have low volume. It's going to be an abbreviated trading day. Rick, you ratted them out. You ratted it out. Yeah, it was a 1966 Pontiac GTO. It's a funny story. We'll talk about it sometime. Why do futures and options exist? They seem to provide similar features. Well, if you have futures, is a promise to deliver product at a future time, at a future price. And options are insurance on whether price is going to get there or not. Excellent, Equanimous. I'm glad. Winter beard looks good. Yeah, I got my winter coat going here. All right, folks. Got 5 minutes. Let's take our deep breath. Stay humble, grateful, and creative today. It's Friday. See if you can't make a little money and start your weekend early. It's about 30 degrees here. I don't think I'm going to be playing golf or anything, but maybe I'll take Lacey for a nice walk and make sure we don't see any coyotes. I'll see you in the proverbial trading pit in a few minutes. Have a great trading day. Have a great weekend. Be kind to yourself. Be kind to each other. Say a prayer for world peace, and I'll see you on Monday morning. Have a great trading day and a great weekend again. Take care now.